Good day, Jeffrey Friedman, Senior Market Strategist, RJO Futures, December 12th. Happy holiday with my daily comment on stock index futures. And I always give you the word of the day. What is the word of the day? What drives the market this week? What's the one thought? And I would have to say it's crude oil. Now, crude oil is not a stock index, but it is 12% of that part of the stock index futures, S&Ps, that energy sector, if you will. And because in the last 60 days, we have dropped 40%, it's more of a momentum play than supply and demand. Yes, I know that OPEC is letting their supply be where it is instead of tightening it up. And in the last 10 or 15 years, yes, OPEC has kind of supported higher prices. And every time we have problems in the Middle East, we have geopolitical problems and we get a firm bull market in energies, i.e. crude oil. Now, having said all of that, we have gone down 40%. We've gone from 100 basically down to 60. Some people are calling for 50 or 40. And what's the concept? That possibly OPEC wants to hurt their competitors so that they can go back to controlling the marketplace. And this will affect the stock index futures, i.e. 12%, or possibly even more on an earnings and PE ratio and the fundamentals that drive earnings. Now, have said that, okay, it is good for the consumers, okay? Lower gas prices at the pump. Take crude oil, you make gasoline. Now, have said all that, looking at some of our situation in America, Michigan sentiment beat the street, 93.8. Retail sales, 0.7. Taking out cars, 0.5. We were looking for 0.2 and 0.4. Those are great numbers for the consumer, retail, wholesale, PPI. That came out. That was a little negative. Then you got to think about deflation. Okay, is what's happening in crude and what's happening in commodities a reflection of global deflation versus inflation? We know we have a slowdown in China. We know we have problems in Europe. We know that central banks are stimulating all over the world. America is trying to pull themselves off of that bond buying program and free money. Okay, but that didn't seem to hurt the stock market, and we were at all-time highs only 2 weeks ago. So this week we've pulled back, and they're blaming it on crude in general. You make the call. Technical analysis. S&P, March contract, and you should be in March, not December. So do the roll if you haven't already. 2050. We are in a short-term downtrend in the stock market, S&P future contract March. We are around 2016. We were as high as almost 2100 or 2085. So we've pulled back about 65 or 70 points in the S&P future contract. But have said that, we're in a short-term downtrend, medium-term, and long-term uptrend, 5-year bull market. Now, have said that, we need to get a close above 2050 in the March contract, according to my chart analysis. And I think that your next support level would be 1996 in the March contract. There's some minor support and resistance. 2038 pops in. But in general, if we're going to test the highs, we have to close above 2050. Otherwise, short-term momentum is in control. The bears are in control. Short-term trading. Good luck and good trading.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.